It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Because of the extremes in mortgage rate fluctuations that we've seen over the past few years, it's possible that some Australians are a bit wary of getting into the market, taking on excessive debt. Having said that though, a reduction in interest rates might increase a bit of that sales and mortgage activity to the end of the year. It's just we're not getting back to the record lows that we saw around the COVID period.
And that is Eliza Owen on our Wednesday morning. We'll get back to Eliza in just a moment. Welcome back to the Real Estate Breakfast, right around Australia, 7 days a week. We are talking about your property news and information in Brisbane, Adelaide, Canberra, Gold Coast, Melbourne. We are everywhere. And you can stream us on multiple platforms, including iHeartRadio, Spotify, Apple Podcasts, and Amazon. It is a Wednesday morning, July the 2nd today. And if you're about to take off and escape the winter, perhaps head off somewhere tropical on a cruise, don't watch Netflix's new doco about the Carnival Triumph disaster. You might not actually end up catching that cruise. Now, this disaster happened a few years ago with an engine room fire that left 4,000 passengers stranded without power. Can you imagine? The toilets weren't working, no air conditioning, then the toilets overflow, sewage is filling the hall. They were stranded for 3 nights. They were sleeping out on the deck. Everybody was out for themselves, and anything that could go wrong did go wrong. So good luck with that cruise if you're heading on one. Let's right now catch up with Eliza Owen, the head of research at Corelogic in Sydney. Actually, Eliza, last time we were talking, I was telling you about my cruise from hell. Have you seen that new doco I've just mentioned?
No, I'm trying to be thrifty, so I've paused Netflix for a minute, but I might have to fire it up again and check that out.
Yeah.
Sounds like a horror story indeed.
Yes, it's a good one to watch, that's for sure. Now let's talk about the Australian housing values. They rose 0.6% in June, marking 5 straight months of growth. Tell us about that.
Yeah, so we've definitely seen housing value trends pick up again in line with the rate cuts that started in February. We got another one in May that seems to have supported the market. So that 0.6% lift in the month of June is up from a 0.5% lift in the previous month. It was a pretty broad-based increase as well. Each region and capital city markets are an uplift over the month, except for Hobart, which was down 0.2%. But overall, it seems like the housing market is continuing to find some strength in the tailwinds of rate cuts, low supply, and also just a bit of confidence that rates are going to keep coming down throughout the year.
And I see that Darwin led the capital cities with a 4.9% quarterly rise, reaching a new price peak not seen since 2014. And Perth and Brisbane also performed pretty strongly.
Yeah, that's right. So Darwin is leading the charge, which is pretty unusual because this is a market that underperformed over the past couple of years. As you say, we haven't seen it at these levels since May of 2014 when we were going through that massive resources boom. So it's finally caught up to new record highs. Perth and Brisbane saw pretty strong rates of growth. So Perth was up 0.8% in the month, 2.1% in the quarter. Brisbane up 0.7% in the month, or 2% over the quarter. Between that and Darwin, these are definitely some of the higher growth rates that we're seeing across the country. And again, it comes back to things like low levels of supply and more tailwinds for property demand in terms of population and jobs growth in these states and territories.
And despite renewed momentum, housing turnover remains below average at 4.9%, you guys have reported, and advertised listings are down nearly 17% from the 5-year average.
Yeah, that's right. So basically what we've got is a housing market where values are higher, but the actual act of buying and selling property is lower than usual. And the reason we think that is because of some of the recent economic and geopolitical events weighing on confidence And so people are just kind of holding back from the market, waiting before they jump in and make big decisions around buying and selling homes. There was also the fact that turnover was just so high in 2021 when interest rates were at a record low that probably brought forward a lot of buying and selling activity a few years back, and not as many people need to transact at the moment.
And talking of transacting, regional markets still outpaced capitals quarterly, but growth momentum is shifting back to major cities, which you guys have also talked about.
Yeah, this is really interesting. So over the start of the year, we've basically seen a bit of an outperformance in regional Australia. In the June quarter, regional home values were up 1.6% compared to 1.4% in the capital cities, which we put down to things like more affordability in regional Australia and stronger internal migration trends. So less people leaving the regions, more people going to the regions on average. But over the past couple of months, including the month of June, we've seen that the capital cities have actually outpaced again. So they've kind of retaken their advantage, if you like. So capitals up 0.6% in the month compared to 0.5% in regionals. And it could be that as we move forward in the course of the year, the capital city market could actually start rising more quickly. And that's basically a function of lower interest rates as well, because higher priced markets tend to have a stronger reaction to changes in interest rates.
We are talking to Eliza Owen from Corelogic this morning. When we come back, we're going to ask Eliza about the upcoming RBA meeting and what they might do, and also talk about the mortgage arrears, which are still low despite those rate hikes that we had.
Let's fuel your passion for property together. Join us, along with our industry experts, to help inspire and inform your next real estate decision.
And right now it is time for another property tip. And recently we were talking to Wendy Chamberlain there, a buyer's agent in Melbourne. Wendy, you have got a property tip, and it comes down to some of these contracts, reading them correctly.
That is right. Make sure you check the contract thoroughly and look at the minutes of meeting from the most recent AGM, because that's where you'll find gotchas that you may not be aware of.
Yeah, and it always amazes me when it comes to a simple piece of due diligence, reading everything that is in the contract, that people don't do it. And over your 30-year career, you would have seen this time and time again.
Absolutely. They are bulky, weighty, jargon-filled documents, and you must understand what you are signing on the dotted line.
Get insider tips from industry professionals and level up your real estate game by unlocking the secrets of successful real estate transactions.
And it is a Real Estate Wednesday right around Australia, talking to Eliza Owen. And yeah, first off, got to ask you about the RBA meeting, which isn't too far away. You know, we've had some of this shenanigans, shall we say, from Trump. But what are you guys expecting to take place with this meeting?
Yeah, so despite some of the uncertainties internationally, you know, you've had a big question mark around oil prices recently and the tariff trade wars that are kind of going on, it seems that most major banks and data flows are showing that we are ready for more rate cuts. This was pretty pronounced from the monthly CPI data, which came out last week. It showed that annual headline inflation came down to 2.1% over the year, and that was down from 2.4% in the previous months. And the all-important core inflation reading was down as well. So that was within the 2 to 3% target, 2.4%, and that had also come down from the April read. So that basically firmed up this idea that, okay, inflation is still continuing to come down. We're probably good to cut again. It's even brought forward expectations around a rate cut for the July meeting among many forecasters. I think in spite of everything, inflation is still coming down. We've still got pretty tight labour market, but that doesn't seem to be re-accelerating inflation or wages growth terribly. So it looks like we'll probably get at least 2 more cuts this year.
It would be unusual then, with this one coming up in July, that we wouldn't get a 25 basis point cut. That's probably where it's headed, yeah?
Well, I think the RBA could actually move another 25 basis points. It's just that the expectation of a rate cut has been brought forward from the August meeting to the July meeting because the inflation data was looking a bit more positive. Outside of that, if we don't get the rate cut this July, I would certainly expect one for August and then potentially another one for November.
Okay, so it could be 50 basis points. We'll watch that with interest. Now, mortgage arrears in Australia, they have edged up slightly to 1.68%, but remain historically low, even under rising interest rates that we had. So that's pretty good, isn't it?
It's really good, and it speaks to basically the stability of the broader mortgage market. When we talk about mortgage arrears, we're talking about the portion of outstanding mortgage payments that are coming in late, and these are measured from 30 days or more past due. So the total arrears did rise in the March quarter to 1.68%. It looks like it's starting to flatten out, and you would expect that with interest rates starting to come down and mortgage rates starting to come down, that people might even be able to better cope with their mortgage payments, and we could see mortgage arrears come down further.
Well, since I've been doing this job, Eliza, one of the constant talking points has been testing borrowers at 3%, and Australia's tough lending policies like that 3% above the actual rate, that has helped contain default risk without a doubt.
Yeah, because what it does is if you're unable to repay a mortgage at 3 percentage points above the product rate, you don't get the loan in the first place. That helps to protect Australian mortgage holders against things like shocks of interest rate rises, even things like job loss. Australians are pretty good at building up their mortgage buffers really quickly because most people don't go up to their maximum borrowing capacity. So what we tend to see is that Australians make a lot of extra payments, and it's estimated that about 40% of owner-occupiers with a mortgage are at least 2 years ahead on their payments. That helps to keep servicing mortgages even in the instance of job loss or income shock, and it keeps that overall arrears rate low as well.
Yeah, you talk about income shock. I think as a result of what we went through post-COVID, it's kind of baked into the mindset of borrowers now because they just do not want to get into that situation of any defaulting or anything remotely that sort of looks like that.
That's a really good point. And to be honest, it's probably also reflected in the Consumer Sentiment Index reported by Westpac and the Melbourne Institute. That's still running at a pretty pessimistic level. And it goes back to the lower sort of sales activity that we're seeing as well. Because of the extremes in mortgage rate fluctuations that we've seen over the past few years, it's possible that some Australians are a bit wary of getting into the market, taking on excessive debt. Having said that, though, a reduction in interest rates might increase a bit of that sales and mortgage activity to the end of the year. It's just we're not getting back to the record lows that we saw around the COVID period.
Indeed. All right. Well, go well on this Wednesday morning, Eliza. A lot of great information for our July 2nd, and talk again soon.
Nice one. Thanks for having me. Take care.
Each week, we bring you in-depth real estate discussions, including inspiring stories from homeowners, knowledgeable real estate professionals and economists. Whether you're a buyer, seller, or just a real estate enthusiast, we are your ultimate property podcast.
It included stamp duty concessions for first home buyers, loans for modular housing and shared equity loans. Those were the three big things. They've allocated $119 million to reduce stamp duty costs for first home buyers. They've allocated $210 million for Keystart, which is where you have a shared loan with the government.
Yeah, and then just coming back to this Fraser Hotel last Thursday, a little bit of news around the sale of this.
That's right. So they paid more than $100 million, the state government, for the former, what we know in Perth as the Fraser Suites, which is a luxury hotel. It's a 19-storey tower, Craig. Their plan is to put Perth's poorest people into luxury accommodation that once cost honeymooners and executives $320 a night. And it's the most costly acquisition ever made under a state government spot purchase program. And it will be leased as affordable housing for low-paid workers, and the remainder will be rented to social housing tenants who are drawn from a wait list.
We connect you to the best real estate information across Australia. The Real Estate Podcast.